Hi, and welcome to Magic Scanner website, a fundamental stock selector for KLSE and SGX financial market. You're about to learn the secrets to raking in double to triple digit return per annum in trading or investing, no matter how much time you've had to prepare. It doesn't matter if you've never had any past experience or education, this Magic Scanner will tell you everything you need to know without spending too much brain power. This is unlike any tool you'll find out there. It's the edge that most analysts and fund managers want or have. Go ahead and get yours now.
Good morning. Welcome to you all to another Friday chart clinic for the week ending 30th of August 2013. It has been a very interesting 8 months. We have the market hitting high since then and somewhere just after elections. And that goes on until hitting another new high, 1810, somewhere in the mid July, right? And well, there was a question here. Do you think it's safe to accumulate blue chip dividend counter stock at this price? Hannah, I think you should read my September um, stock market comment that should able to answer your question. Now, it's very important you must have a plan, just not simply go in and buy. A lot of people I've seen that done it before, but they did not have the conviction to go through it. It's like this, you learn a bit of knowledge, but you have no conviction to carry through. It's better to acquire some sort of a plan or what you intend to get the knowledge that will help you a lot. That's my experience anyway. If you just go in and buy and subsequently there's no chance you're able to make the kind of return that you want to. But anyway, for those of you who want to know, we have our Friday chart. Our Friday closing bell stock picks where we pick one penny stocks and two reasonable stocks plus one SGX stock that will be available for our premium members. So you can watch all that when the time comes on our Friday chart link. So think about it. So more updates will be talk about this Friday at 4:15 p.m. So that's what we're going to be doing now. A little bit of agenda today. I'm just not going to talk about the market outlook. Today, Wednesday, we have the Master the Market preview, which is for November 9 to 11. Now, that's the main course that we normally do. So one of the reason why we are previewing this early, because there've been a few requests that people wanted to make some sort of arrangement on the travel plans, year-end travel plans, to make sure they can attend this, because we only do it twice a year, this course, and it's one of the very unique course that people talk about. Perhaps maybe I can talk about, there was a question posed later on this, and they did ask what's the difference between this course, Master the Market, as compared to other trading education provider. You can see some of the testimony has been very positive, but I just want to share with you what are difference between us and the other education. One definitely is our quality of delivery, and Bill and myself, we are readily available to help you one-on-one. And if you ever need to meet us, just come to our office and we'll sit down to you to really iron out your trouble, whether it is a meta stock problem or it's a trading plan problem, it's learning how to do that. We will always do that. And another reason also why we felt that it is a value for money course, Master the Market, because we train you to think like a risk manager. Think like a risk manager, think like a professional. A lot of people who is very ignorant, they come in with a greed in their market. They say, wow, today I can make 1,000%. That's all they think about. But they did not figure out that you can also lose 1,000%. So it's very important. You are going to be in this market for a long time. So it's important that you preserve your cash and wait for the opportunity to come. So do I say this makes sense? Because a lot of people come in with this with the notion that, wow, I'm going to grow rich and I want to get rich as fast as I can, making 1,000% return in 1 or 2 days. And guess what? You can flip through it. But the key thing is you have to think like a risk manager and you have to undergo all market cycle, like what we are doing now. We have a down cycle. What do you do in this down cycle? Okay, so think of that. Next thing is also we teach you to weight the options, as a risk manager. So now you'll be managing your own fund, whether it is small amount or big amount. I'll give you an example. In our third day, we actually teach you the futures trading. So in futures trading, especially now that the market is so volatile, we would ask you, those of you having a small account, about $5,000 or $10,000 account, to avoid the market completely because of the market volatility. And if you're going to be trading, you make sure you stick to watching the screen. And that's important because the risk, the volatility can wipe you out if you carry overnight position. So those are things that we actually teach you in our course. And also we actually show you time-tested trading method that works. And we are using it ourselves because a lot of education provider, they will teach you 26 types of technique. So when you go and ask them which one works, you try all of them out lah. Which one work for you, work lah. But remember, all of us don't have all the money to try out all 26 methods. Teach me one that works. So in here, we teach you one method, which is our classic insider breaking code, which is unique, and we call it volume spread analysis, which is our main function of this master the market in here. So we are the only provider in this region, as I said before on Wednesday. And while there are other copycats of the VSA, and they are charging 10 times more than us. Finally, I would say why we're different from others is that Bill and myself, we are licensed professional people by the Securities Commission. Bill has a fund manager. I have a dealer remiser license. And also, we share stories of our top trader that we have trained and we have teach over the years. I mean, if they make their money, we'll bring them out and actually during the course to actually share their secrets with you. I think that's a whole bottom line rather than listening to a guy just yelling and shouting, hey, I make you money and get you to jump around. So I think that's why we are different. And over the years, I was also one of those guys jumping around. Oh, hi, Carol. Okay, good. So with that, I want to take on to the next speaker, our US correspondent and ghost comment, Bill Vermine, to give you an update on what's happening into the market. All right, go ahead, Bill.
Okay. Good morning, everybody. Well, today I'm not the U.S. correspondent. I'm the Thai correspondent, Thailand correspondent. And the reason is this. I want to show you a little thing from the Money Week, which is a magazine, the Britain's best-selling financial magazine. And they have a comment here from one of their research people, Dr. Mike Thompson. He said this. He said he shares something from Warren Buffett, and some of you obviously know this. It's better to find an excellent company at a decent price than to buy a fair company at an excellent price. That means a cheap price. So he says, how do we measure company quality and how can good performance persist? So Warren Buffett did, when he did research on this, he found that companies that have, you measure quality by cash flow return as a proportion of operating assets. And he found out that strong companies tend to stay strong, while poor ones are hard to turn around. So that's what Martin and I focus on. We focus on strong companies which tend to stay strong. This is how we invest our clients' money, and obviously we look for dividends. And what Warren Buffett found in his research, he said the results are staggering. The average return over 60 years is 6% for all firms. However, those that met his criteria of having a very high percentage of cash flow return as a proportion of operating assets had an 11% return. So it's greatly outperformed the average asset or the average share that the retailers chase and the hype and that sort of thing. So I looked at that, and that led into what I'm going to be doing. Next Monday, not this Monday, but a week from Monday, 9th of September, I've scheduled a visit to Thailand. I'm going to be visiting some companies there, and I'm going to be escorted by the Philip Asset Management of Thailand. And I'm going to try to look for some opportunities there. I have some on the radar list now that meet the Warren Buffett criteria, and I'm going to get a good feel for the economy before I do anything. And this leads to this. We have a newsletter that I've been subscribing to more than 20 years called Currency Bulletin of London. It's run by John Percival, one of the most famous currency traders, investors in the world. He ran Chesscore Fund for many years, top performing currency in the world. He's a multimillionaire. So he's still, to keep his brain focused and alive, he does a weekly newsletter on markets and currencies. And this is what he said in last week's newsletter. He says recovery in China continues with manufacturing PMI rising above 50%. And there's also a focus on disinvestment in emerging markets. This concerns us. That would be Thailand, Malaysia, Singapore, Indonesia, all of the countries in the emerging markets. And then he said that Currency Bulletin, meaning himself, sees this as temporary. and resilience will return and is expected to endure. So all of this talk on quantitative easing and capital outflow, this is hot money and running away in fear. But he says this is temporary and it'll bottom out. Now, I was I was quite interested in the comment because we invest in this part of the world, and I want to consider to put some more money in Thailand. We already have some money there, but we want to add to our positions, invest more. Now, wrote to him, and I said, I asked him about this. Why do you see disinvestment in emerging markets as temporary? I live in Malaysia, and disinvestment here, Singapore and Thailand, is going on at a blistering pace. The local crowd of analysts is very bearish on the Malaysian ringgit, Thai baht, and Sing dollar and stock markets. In fact, inflation is picking up. And I mentioned this. I said Clark Shoes, which is a UK brand, just raised their prices 20% in Malaysia. And this hurts me because my old pair of Clark shoes is worn out and I need to buy another pair. I've used Clark shoes for as long as I've been a subscriber to your newsletter, and in my opinion, the most comfortable shoes in the world. Now, here's his response, and this is something that is a takeaway value we can all benefit. He says, "Hello, Bill. The more bearish people are of emerging markets, the more the guess that emerging markets selling is temporary and in line with CB's methodology." That's John Percival Currency Report methodology. It's like chucking out old worn Clark shoes. You have to go back into new ones, meaning don't get scared. Get in, accumulate, and buy at the time of the maximum pessimism and fear. That's why he's a multimillionaire, because he always considers the Warren Buffett philosophy: buy the fear and sell the greed. So I leave you with that. And when I do come back from Thailand, I will report on Thailand to you guys. So I'm no more a U.S. correspondent, Martin. Now I'm Thailand correspondent.
Let's give applause, right? After Thailand, we're gonna get Bill to extend to Philippines, and we'll probably do Indonesia too. You see, so that's one of the role that we do as a professional fund manager in here, looking for opportunities and looking for gem. In the longer run, you can make big money using that way, but at the short time, you can still do trading too. The little bit thing also. Now, I just want to show you something very interesting that I came across. Is a new movie that's coming out in September. It's called Money for Nothing preview. Bill, you should see this, Bill. I'm going to show you this one here, a preview of this Money for Nothing, and I'll play it, and hopefully you can listen.
Most important appointments as chairman of the Federal Reserve. The Fed is the symbol of the integrity of our financial system, and the decisions of the Fed affects the lives and livelihoods of all Americans.
I think we're mysterious to people. I think they're not sure what we do.
The Fed is a sometimes very independent organization.
Every Federal Reserve chairman says one thing and does another.
It's a bunch of government workers trying to fix prices.